You are being legally robbed, not by criminals, not in the dark, in broad daylight, written into law, signed by elected officials, and maintained by the very people whose job it is to fix it. While you paid somewhere between 20 and 30% of your income to the government last year, some of the wealthiest people on the planet paid almost nothing. Not because they cheated, because the system was deliberately designed to let them off the hook. And today, we're going to walk through exactly how they do it. It starts with a simple distinction that most people never learn in school. The income tax system only taxes one thing: money you earn from working, wages, a paycheck. But billionaires don't get rich from wages. They get rich from owning things, stocks, companies, real estate, that go up in value over time. And under U.S. law, that increased value is not taxed until you sell it. That's called an unrealized gain. Until you cash out, the IRS cannot touch it. So when Elon Musk's Tesla stock rises and his net worth jumps by $10 billion in a single day, he owes zero in taxes. Not because of a loophole exactly, just because he didn't sell anything. That's the rule. And it's a rule that works out very differently if your wealth is a 401k versus a multi-billion-dollar stake in a publicly traded company. But here's where it gets truly ingenious. Billionaires still need cash to live, to buy mansions, fund private jets, acquire other companies. So how do they access their wealth without selling and triggering a massive tax bill? They borrow against it. Banks will hand over hundreds of millions, sometimes billions of dollars, in loans to anyone with that level of assets as collateral. And here's the critical part. Loans are not income. The IRS does not tax borrowed money. So the billionaire pledges his stock, receives billions in cash, spends it however he wants, and pays zero income tax on any of it. When that loan eventually comes due, he doesn't sell stock to pay it back. He takes out another loan, then another. The cycle repeats, potentially for decades. On Wall Street, this strategy has a name: buy, borrow, die. And that last word is where the most astonishing part of this story lives. When a billionaire dies and passes those assets to their heirs, something extraordinary happens to all of those accumulated, never-taxed gains. They vanish. Legally, permanently. It's called a stepped-up basis. The cost basis of the inherited assets resets to whatever they're worth on the day of death. So if a billionaire bought stock for $1 per share 40 years ago, and it's now worth $3,000 per share, and he dies holding it, his heirs inherit it at the $3,000 valuation. They can sell everything the next morning and owe almost nothing in capital gains tax. 40 years of appreciation. Never taxed. Not once. This is how great fortunes survive across generations, not just through smart investing, but through a tax code that was written to protect them. In 2021, ProPublica obtained leaked IRS data on the 25 wealthiest Americans. The numbers were striking. Between 2014 and 2018, those 25 individuals grew their combined wealth by $401 billion. Their total federal income tax bill over that same period, $13.6 billion. That works out to a true tax rate of about 3.4%. The average American worker, over the same period, paid a far higher share of their income, often 6 to 8 times that rate. And then there's charitable giving. When a billionaire donates appreciated stock to a private foundation, one they control, one that employs their family, one that advances causes they choose, they receive a full tax deduction on the current market value and pay zero capital gains on the appreciation. The money stays in their orbit. the tax bill disappears, and they gain enormous influence over public life with dollars that were never taxed at any point. None of this is accidental. The U.S. tax code is nearly 7,000 pages long. That complexity didn't appear on its own. It is the product of decades of lobbying, campaign contributions, and a revolving door between the financial industry and the lawmakers who write the rules. Every loophole has a constituency. Every carve-out has a donor. Is any of this illegal? Almost never. That is precisely the point. The ultra-wealthy don't cheat the system. They shape it, fund it, and benefit from it, while everyone else plays by a completely different set of rules. There are proposals to fix this: a billionaire minimum income tax, reforms to the stepped-up basis, limits on the borrow-to-avoid strategy. Whether any of them ever become law depends on political will that has, so far, been nowhere to be found. But the first step toward any kind of change is understanding what's actually happening. So now you know. Share this if it made you think.